Hi, this is Ted Kelly with another Ted's Hospitality Minute. Hey, today we've got a great guest on. His name is Greg Friedman. He's with the Peachtree Hotel Group. He's going to come on and tell us a little bit about their services. Of course, we always like to hear how folks have been faring over these last 2 years with COVID, and then maybe talk a little bit about how 2022 looks for them and the area of hospitality that they're in. Hi, Greg. How are you, sir?
Good. Thanks, Ted, for having me on your show, and really appreciate being able to spend some time with you today.
Yeah, man, that's awesome. We always appreciate folks giving us a few minutes to talk about, their respective areas of the hospitality world and what they're seeing and how their world is going. So very quickly, tell me a little bit about you. How did you get into the hospitality world?
I started, actually at a young age because my family was in the hotel business. So I personally, grew up around the business. My family owned some hotel properties, as well as, my family was really big. My grandfather actually was really big in had a company that did a lot of hotel lending. So he was big in hotel lending. So personally grew up, around the business. And when I graduated college, went to University of Texas at Austin. My first job out of college was in banking, where I specialized in, capitalizing and financing hotel projects. And that's how I professionally, was able to get into the business, was on the banking side.
So you're a money guy.
That's correct. I am I guess you could say I'm a money or capital guy. So, at the core, that is exactly what I am. And, but, from the standpoint of just my company itself that started back in 2007, we do everything from operating, developing hotels, as well as even, financing hotels for other groups. So, we own a couple of companies that help, other ownership groups capitalize and finance their projects as well.
Awesome. So let me ask you this. So what makes hospitality a good asset class to invest in today, given the current climate, of course, compared to other commercial real estate assets? Talk a little bit about that.
Sure. Yeah, I think that's a great question. And I think today lodging is probably the most investable asset class. When you look at all the different commercial real estate asset classes out there, I think lodging is the most investable and probably the most interesting asset class to invest in today, just given all the noise around inflation. Lodging in general is, probably the best hedge against inflation because we do reprice daily, as a business. So we're able to take advantage of the inflation pressures. I think, the other side of the equation is you've had, the last 24 months, clearly have been, for especially going back 18 to 24 months ago, was very devastating for the lodging industry, what happened with this pandemic. But, that was, fortunately, we're coming to the end of the impact of the pandemic. And, most hotels are experiencing a surge of demand that's starting to exist at much higher, and that demand that's coming is coming at much higher ADRs, average daily rates. And so because of that, I think, lodging is a much better asset class to invest into, coupled with the fact that, when you look at, multifamily, office, retail, you look at all these different, asset classes, a lot of them are trading at much lower, cap rates than where lodging is trading at. And we've had this disruption of, cash flows, obviously, over the last couple of years. But I think when you take in consideration the expectations of where revenues are headed in lodging over the next 12 to 24 months, given the fact that we trade at a much higher cap rate than where you see apartments and industrial and some of the other asset classes, I think it makes lodging a much more investable asset class. And I'm a big believer that there's going to be, we've seen a surge of demand on travel in the leisure segment, and I think you're going to see that surge on the corporate side, which is only going to help fuel the revenue growth, as well as the actual operating cash flows at these different assets. So I think it's a great time to be investing. If you're buying hotels, developing hotels, I think it's a great time to be in the lodging business.
Do you think in the next 12, 24 months, you're going to see more opportunities for acquisitions? Or do you think that's going to kind of stay as it's been? Or should I maybe back up and say, during the last 2 years, did you guys see more activity in terms of folks wanting access to money? Or did you kind of guys just kind of see things kind of level out? I know there was a lot of legislative um, incentives out there to help folks kind of manage through COVID, but how did you guys, activity wise, what did you guys see as far as hotel lending or possibilities of acquisition during the last 2 years?
So over the last 2 years, clearly there's been a lot of legislation or legislative help that help bring capital into the lodging industry through PPP and some of the other programs that help to provide some level of liquidity to help hotel groups through the pandemic. I think you've noticed over the last 24 months, I mean really going back 12 months, especially 18 months ago, there was very few lenders willing to lend in the hospitality space. I think the number of lenders willing to lend today is starting to grow again, but there is still at a much lower level of the number of lenders willing to lend to hotels today compared to where we were pre-pandemic. So there's still a huge gap of lenders willing to lend into the hospitality space, and that's why the company that we own called Stonehill has been very successful over the last 18 months, because we've been sort of filling that void where we're going in and financing not only new construction projects that different developers are trying to execute on the hotel side, but we're actually helping finance groups that need to recapitalize existing hotels, or to even provide acquisition financing for hotel ownership groups that are looking to acquire hotel properties. And so we've been very successful, just given the fact that there are very few lenders willing to lend, although there is more capital today for on the debt side for hotels than there was 18 months ago. So I think it's there's no question there's more liquidity in the marketplace today on the debt side, and you're starting to see the cost of capital come down as well, especially given you're starting to see you're starting to have more clarity on just how the recovery is going to play out with lodging. So I think more lenders are getting comfortable on how they're going to underwrite cash flows on a go forward basis. And sort of going back to your original question, just on the acquisition side, I do believe, because over the last 18 months, it's been a very challenging market to buy hotels, because although everyone, or I would say most hotel ownership groups have experienced some level of disruption of cash flows, or maybe even distress at some level. Most groups are probably through the worst of that piece of it today, but most groups were well capitalized enough where they didn't have to sell hotels at these deep discounted levels back in the back at the beginning of this
Right.
Pandemic. And so we there wasn't really a lot of assets to buy at at cheap or distressed pricing, is what we saw over the last 18 months.
Right.
Because there wasn't a lot of certainty until the last 6 months. We felt like it didn't really make sense to be an active buyer of hotels until like 6 months ago. So over the last 6 months, we've been very active on acquiring hotel properties. We believe there's going to be more opportunities to acquire more hotels over the next 6 to 12 months, just given the fact that a lot of hotel groups are hotel ownership groups are facing fatigue from the pandemic. You have a lot of lenders that are putting pressure on hotel owners to refinance their loans that are maturing. That's going to create more pressure for potential asset sales. And the other factor is just the need for hotels in general today are probably in the worst capex position of all time, because most hotel owners and operators have deferred out capex projects in order to shore up liquidity. So the brands are starting to mandate PIPs that they've delayed. Hotels need to have more capex projects completed, and as ownership groups are faced with injecting capital for these renovations, a lot of them are going to make the decision, we believe, over the next 6 months, and what we're starting to see over the last couple of months, to sell the hotel versus invest back into the asset. So we think it's going to be a very interesting environment to be buying hotels over the next 6 to 9 months.
Hey, let me ask this question. When you guys are looking at potential deals for purchase, what do you guys look at to mitigate your risk, more or less, to protect yourselves, make sure you're going in and everything's going to work out the way you guys want it to on the back end?
Sure. So we look at a couple of different factors in order to mitigate risk. So we're we're really, big believers that, we want to make sure, we're buying the asset right. And when we say buying the asset right, we're really focused on our basis. So we want to be, in at a basis that's, not only, at or below replacement costs, but, we want to be at a basis that's, representative of the other competitive properties in the market. So we don't want to be at a huge basis compared to, and when I say basis, price per key, compared to, where other competitive properties are in that marketplace. We're also mitigating risk by really diving into what's driving demand for a hotel at that specific location. And so we want to see that we're investing in markets where we believe there's multiple demand drivers that are sustainable for the foreseeable future. And so we want to make sure that we're not in a situation where there's artificial demand that's going to disappear once a project's completed, but we want to know that there's more demand that's behind it. And there's in a lot of cases that means that we want to be in markets where there's multiple corporations that are driving or have the need for lodging. There's leisure reasons for travel and group reasons for travel,
Right.
maybe on the weekends for soccer tournaments and things like that. So we're looking at the different demand patterns. And then finally, we're big believers in the different brands. And so usually, we're investing in certain brands because we believe they have really good retail distribution channels that help because we're in there's no question we're in a very cyclical business, but we find that certain brands tend to perform better through down cycles because they have that strong retail distribution channel. So we look at those factors when making, investment decisions, if it's acquiring a hotel or developing a hotel to mitigate risk.
Right, right. So is there a particular select service model, location, that you guys kind of steer yourself toward to kind of protect yourselves right now as you're looking at deals, or how do you guys kind of position that part? Is there an ideal select service, extended stay or type of hotel that you guys prefer to gravitate toward to make sure you're positioning yourself properly?
So there's no question this pandemic has proven, again, what's been proven, through the last couple of down cycles. If you look at the Great Recession, go back to the dot-com bust and 9/11. I think select service, limited service hotels, as well as extended stay hotels, have been very resilient in how they've been able to sustain through those down cycles, and their recovery has been very robust through each of those time periods. And so we're very focused towards select service, limited service, extended stay hotels versus large group house type hotels. I think there's no question we prefer, as we sit here today, I'd say it's a little bit different than our normal market we're buying into, but we love leisure markets right now just because leisure markets have recovered the quickest. And in most cases, leisure markets are not only back to pre-pandemic levels, but they're actually exceeding where they were performing pre-pandemic. So we love leisure markets as we talk right now. But ultimately, the type of markets we like to invest into goes back to what I was talking about before, just markets that have diverse demand drivers where we're not relying on one piece of business. Because when you take this this black swan event, this pandemic out of the equation, and when we're back in a normalized environment, we find that diverse demand driver type markets tend to hold up and tend to be more sustainable over longer periods of time.
Yeah. Where do you see the opportunities are? I know right now from the hospitality standpoint, it appears that the urban market is getting beat down and still slow to come back. Obviously, the drive to and the leisure locations sometimes just ringing off the charts. Where do you see the opportunities are coming up in 2022? I mean, what's your thoughts on that?
I mean, there's no question from a performance perspective, as you stated, the urban markets are still lagging a lot of the suburban and leisure-driven markets on the recovery, and we do believe there's probably some opportunities that should come out of those markets. But I do think from just a perspective of investing in lodging, as we talked about early on, I think it's a great time to make a macro investment into the lodging space. So I think there's a lot of places you could ultimately invest into that we believe are going to provide an opportunity to really get outsized returns relative to the risk that you're taking. So I do think there'll be some opportunities even on the full service hotel side that's been probably the most severely impacted this cycle, because they're, group and meeting business has, although it's starting to come back now, has been slow to recover as well. I think, for us as an organization, we're going to continue to stay focused towards flex service hotels, limited service hotels, and we're really going to focus towards the opportunities that we believe that are going to be created by, I don't want to say necessarily it's going to be truly distressed sales, but it's going to be sales that are opportunistic in nature, where groups are being pushed to sell because they have capex issues that need to be addressed. They have lender issues, and those issues are causing, those capital issues are causing them to look to sell, and we're going to have the ability to come in and buy assets at more opportunistic levels, as well as over the last 18 months. Although we've bought probably at this point we've bought about 8 or 9 hotels over the last 6 months or so. We've been very active over the last 18 months, buying debt from financial institutions that are looking to leave the lodging business. So we bought a lot of debt, over 150 first mortgage loans from different, really different banks. So different, regulated banks across the U.S. that have been looking to, deleverage their exposure to lodging. And I think that trade is going to continue to exist over the next 3 to 6 months. I don't think it has a lot of longevity to that trade, but that is a trade that we're continuing to buy debt as we speak. And we believe there'll be more opportunities to buy debt, as well as, across our platform, we are a big lender to the hospitality space and helping provide groups capital for construction financing and acquisition financing as well, and, recapitalizing their existing hotels.
Yeah. So, prior to the pandemic kicking in 2019, the hotel industry was on a 9-year roll. I think it was just going off of the charts. Everybody was happy making money. So now we're at the bottom. How long do you think it'll be before we get back to the top of the food chain again?
It's a great question. I think it's gonna, my crystal ball sort of shattered right before the pandemic. So so I don't have the crystal ball anymore. But if I had a place a bet on it, I think we're going to see, just with all the pressure on the inflation side right now. I think if you talk to Star and some of the other companies that track data, I think a lot of people are thinking that when you take in consideration inflation, we're going to have full recovery back in like 2025 now, or 2024, depending on who you're listening to. But the reality is I think next year we'll as an industry, I do believe we'll be back to pre-pandemic levels in most markets, or exceeding pre-pandemic levels. And so I think the recovery might be a little bit quicker than what they're even projecting, but there may be some lag when you take in consideration inflation, because it's inflation pressures have been so strong over the last really over the last 6 months, but even over the last 12 months. So it's that's going to have some impact on the recovery as well.
All right. Well, I'm going to check back with you on that crystal ball. Okay.
All right. That sounds good.
All right. Hey, Greg, thanks so much for joining us today. If folks are looking for, assistance, acquisition money, how do they find you? I mean, how do you find you guys?
Sure. The best thing to do is probably go to our website, peachtreehotelgroup.com. And I believe my contact information is on our website, under our team section. And I'm always happy to talk to anyone that's, needing capital for an acquisition project, or if they need a JV partner for an acquisition or development project, or if they just need debt capital. We're always happy to take a look at it and see how we can potentially participate in the capital structure, and would love to find ways to partner at some level on any hotel project.
All right, awesome. This has been another Ted's Hospitality Minute. Thanks so much for joining us, guys. You guys have a great week.